Name is Mike Sullivan. Welcome to my YouTube channel. I'm a former IRS agent. I was a teaching instructor there as well. I worked over a decade there, and I've been on Fox Business News, The Briefing, commentating on the audit of Donald Trump's tax returns, been on Fox Business News, and really all the other stations. But today, I want to talk to you about why you shouldn't give IRS a business financial statement, a 433B. So, as an agent, one of my requirements would be, if you owed 941 taxes, is to go out and look at your business. And IRS is going to require a 433B. They're going to want all the documentations. That's their financial statement. You, as the taxpayer or the individual, are going to get eaten alive if you submit that financial statement to the IRS. IRS is going to use that financial statement you give them as a hunting ground. Generally, there's preparation and work you can do to make your case look a lot better than just giving them to it what you think on the top of your head is what IRS wants to see. Anytime I worked a 941 case, the taxpayers who own the business got roasted alive. IRS is going to look at any assets that you can sell to pay the debt. They're going to look to set up the trust fund penalty against you personally. They may want to garnish your receivable. So they have a whole bunch of areas that IRS can look at and say, liquidate, sell, give us the money, liquidate, sell, give us the money. Even as you put values down on your tax returns, on your financial statements of inventories, they may not be correct, and you may give IRS more of a chance to say, well, you can get the money, you can borrow the money, and you can pay us back. Contacting a seasoned professional can change all that. For instance, if I'm looking at your business, I may use different values because as an agent, I know IRS will accept wholesale values. For me, when giving them the receivable list, I make sure they get the list over 90 days to say these are the monies that are still hanging out there. You need your 30 and 60-day money to keep operating, and the IRS agent needs to know that who's working your case. So when you have a 433A you want to give to IRS, if you have any serious money you owe them, you would be a fool to do negotiation by yourself, no matter how clever you think you are. You don't know what IRS is looking for. They don't know the background check they have made when they've come out there, and you better be prepared to give them a personal financial statement. Now, I will tell you this, there are some businesses that just don't have nothing, and you're down to the bare bones, and there's nothing wrong with doing that. But if you have any sizable case questions or skeletons, always hire. You can call me. You can shoot me an email. Happy to answer any questions all your time. Just use good common sense. But remember, IRS's job is to collect that money, especially trust fund money, from the business that owes the tax. And if you do owe these 941 taxes, make sure all your tax returns are filed and you're making current tax deposits. If you're not making them, start making them now. And tell IRS, hey, I seen this video from this old IRS guy. He says I should start making them. Maybe they'll give you a pass. Thank you for listening.